Time to fuel your business success. Welcome to Harmonious at Lunch. We're bringing you bite-sized advice and expert conversations to drive clarity and growth 5 days a week. Make sure you join our Facebook group at humanopt.com/lunch, where listeners like you and our guests hang out so we can find harmony in business together. If you're building a business, you're in the right place. Let's dive in.
Welcome back into some more Harmonious at Lunch. In today's episode, we're talking why capital is not your primary problem. The last couple episodes, we've been all about finances. We told you how to make money. Then we told you how to save money on taxes last episode. And today, I don't know, we're going to talk about how money is not your biggest problem. This is going to be amazing. I have a very cool guest with me, a CFO, and we're going to dive into all things financial. Stan Suhini, welcome to the show, and thank you for being here.
Yeah, thank you, Brandon. Yeah, happy to share my knowledge and why the capital is most of the time not your main problem.
I love this. I mean, I want to dive right in because we're in a world right now where we had the financial influx, if you will, from COVID. We're printing money left and right. We're throwing that into the marketplace. VCs, investors, throwing it around like candy. And we're not there anymore. It's a very stark reality for some people, but there's a lot of people still in this mindset of, I need to fundraise. I need to have investors. I need to find angel investors. Why are you coming here saying capital is not your primary problem? Maybe we should be looking at this a different way.
Yeah, I think like regarding this, for the last, especially like during the pandemic and all these record influx of the capital from institutionals to venture capitalists, and then venture capitalists invest more and more during the last like 3-4 years, right? And and because like there's a lot of publicity, a lot of the media, and like when you read like about these exits back and forth, like these billion unicorns exits, like ordinary people, especially like first-time founders that never start their business before, they're thinking like in their mind, I think they have like this pattern of thinking, if I start a business, I need to secure capital, I need investors, first of all, they start like with venture capitalists, like they have like only an idea, they don't even have a deck. Like I think it's like ordinary path how they thinking, like the pattern. And then I need like VC. I heard like those VCs like doing like just distributing money back and forth. I will come with my great idea, I give them like this pitch, and they will give me like 10 million. They will fight to get in my deal. I think like in their head, like they have this pattern. Then like I see these progressions in there, like 5 months, 6 months. They realize first of all that VC is not the first like who they should approach when they have only an idea and nothing else, like no products, no clients, no nothing. It's just then there's okay, I probably need angel investors. And then they start looking for angel investors and like engaging in those stocks. And like after another, like, I don't know, 2, 3, 5 months, depends on the pace, how they move. They find out like, oh, actually, like it's so hard to secure the money. And then they like, okay, they start asking like those questions. Like, okay, what is the product solving like the problem? Like, did you speak with the potential clients? Like, what's going to be the margins? And I think what I've seen through my career, like I've seen more than 1,000 businesses, and it's not exaggerations. So, like I'm working with like no revenue startups, and I'm working like with 1 billion revenue companies, and like I've seen so many like defaults, kind of when it's like the macro environment is not good, and company like bringing on the defaults but survive, and others like just completely restructures and like they like not really in the business anymore. And I think like these are 2 main things that you need to follow. You need to get customers, enough customers. I think like the main issue that you don't have enough customers and you try to squeeze everything from like, I don't know, couple of customers, and then you don't charge them enough. It's like 2 rules that if they're in place, your business will survive and you will be financially healthy as a company, like if you follow 2 rules. Because it's what I see, like, yeah, not enough customers. I think it's the main reasons why business actually out of the game, because you just like cannot find enough customers for your service, for your products. And then another one is your gross profit margin. You probably don't charge, so you probably can find enough customers, but because you discount the price because probably your margin doesn't work, right? Because like you're not really tight up your cost, right? Like you hire too many people, or you don't really figure out like how to make it efficient. That's why like some businesses stay in the game, because they stay competitive and they figure out how to deliver products or services for a certain price. And if you don't figure out, you kind of like you don't match. And what I see, what is happening, I think it's like the trickiest one, and where people stuck for years and they end up in this default and personal bankruptcy and all these like nasty things. They start getting clients, but they don't charge them enough. Like their gross margin doesn't work, so they don't have enough gross margin even to cover like cost directly associated to provide this service. But they see the revenue growth, and like they see, oh, growing, like everything's fine. I have customers. I have more and more of them. I just need money, right? Like I just like I'm bleeding the money, right? Like I need money, and I will solve all the problems, right? It's just like I just don't have enough money. It's how they think. But most of the time, it's not because you have no money. It's because you don't charge enough. And usually you don't charge enough because you cannot sell the same service for a higher price, because then you become like you can compete with other guys, right? And it's why I see like this pattern repeat so many times, and like it's like these horrible stories. I would say, yeah, and given what I said, like the capital is not your main reason. Whatever you start is like just a normal business, I know, roofing, whatever, like grass cutting, whatever is the business, or even like a startups. If it's not super complicated solutions for like a large enterprises in a certain sector, you need to build first your waiting list of clients that will serve like this like a issue with the, especially with startups, they fall in love with the products and solution, and they like start building like just in vacuum. Like they start building something and they don't know if anybody will buy this, and you need completely flip the script, and it's why they also think they need money. Oh, I need to build this product, it's absolutely amazing solution, everybody will love this, it's I love it, and then everybody will love this. Like they have like this notion, right? And they never spoke like with any, even like one client, potential client that will use it, right? And they just have no clue like how to sell it, what's the main value, how they will price it. And then they start building. They think need capital, they think they need to hire more engineers, and then like spend like 1, 2, 3 years, they spend their money, probably I know they spend angels money, and then they find out like in 2 years that nobody want to buy what they build. And it's why everybody thinking like I need capital, but they need first to get clients. Like even if you don't have a product, you like nobody will like just nobody will stop you. Just talk to them and describe what you're gonna build, what they love, what they pay, and then you kind of like re-engineer it back. Okay, if they pay this amount, if your product is viable, like there's so many products that just like the pricing and the cost to deliver this product or service is just too high that it doesn't make any sense like to build it and deliver. Yeah, and so many people kind of got this wrong. Yeah, and like I heard this crazy story, so that like I just laughing, and I don't know, I understand like some people don't really understand certain financials, because I think financials is quite simple. You don't need to be like a PhD or something like to really get this concept. Yeah, like you start a consulting business. I hear sometimes from people like they start a consulting business, say like I need an investor. It's crazy. Like you starting a consulting business, you just like find your first client, deliver your service, get the paid, and usually you pay something upfront, and then you get the rest when you delivering all your outputs or your deliverables, and that's it, and you get the price. And still I hear like those stories, people think that I need money first, and it's why. And like when I'm thinking like why people frame this way, they want to subconsciously, probably some of them don't really know like what to do, like, but some of them is for them it's the way to avoid to do painful things. It's like for them to avoid like very uncomfortable things like cold emailing these potential clients, right? It's way more fun just to like, I'm software engineer, I want to build this stuff, I don't want to talk with anyone, right? Like I don't want to hustle, I don't want to get those rejections. I will build. I need just money like to hire engineers, and then I will hire salespersons. They think like solutions is perfect. It's like unbelievable. Like everybody will buy. I can hire like a third tier salesperson and he will figure out it because the product is so good. So it's the way they're thinking. So for a lot of them, it's also to avoid this kind of like uncomfortable workflow that they need to do in the very beginning, and they kind of try to avoid it and substitute it. Oh, I just need the money.
Yeah, it's so funny that you're saying all this too, because this is, you told the story of our business to some degree. Over the past few months, we were brought in after the fact, but it was a software pivot. It was a consulting product that made a software pivot. Now, don't get me wrong, the product itself is phenomenal, like some of the best stuff in the world that I've ever seen. That's why I agreed to join the company. But they went so heavy on the people, the development, and when me and my business partner came in, who were acquired, we're like, has anyone talked to a customer about if they wanted this? Like, is this is this an actual need, or are we just like building because we like it? And quickly found out that we hired a third tier salesperson to hire a product that wasn't built and had no forecast of development. And then we were like, oh shit, what? We got to rebuild the entire company essentially. So tell me this. I want to walk back through your history. When you have those founders who are super passionate about the product, they want to just be the engineers, like you said, and build it, and then go to the marketplace with the if you build it, they will come mentality, which, spoiler alert, that doesn't exist. But how do you sort of walk them through validating the product itself? Have you had clients where you've had to say, okay, go prove this, go get me reports of what people said they would pay for it, or along those lines? Or do you just kind of walk away from those people?
No, I'm trying to explain them. Like you need to secure the kind of like a first clients. You need to have a waiting list of clients that will use your products. Like it's like I think like when you have no revenue, it's one of the first things like that venture VCs ask, like if they want to look at this deal. They are not really keen like looking right now anything that is just, if it's like not a successful founder, they don't usually finance something that no revenue, nothing, just like an idea. Even they have like, I don't know, MVP. Yeah, just like go for clients and figure out what they want and how much they ready to pay. Like, and you will learn a lot. I think like the cycle, the everything. I know I have one client. They work with banks, large banks, and like the sales cycle is unbelievable. It can be like 2.5 years, 3 years, and just like even like this information, you will like, like, oh, I will build this one, and then we'll have like talks with banks. Okay, let's say like they slow, like we'll close this deal in 5 months, right? Like probably what they thought, right? Like, and we'll have all these connections and so on, and they have connections, but it's not the reality. And then when you find out this, right, it's kind of like, okay, how we approach it is like the time frame is completely different, right? Like even in terms of fundraising, how you scale the team, how you build the product and everything. If you know that your sales cycle is going to be a few years, like until you get like to your first revenue, and it's just like, yeah, it's everything. And on top of that, I think especially right now, like I will bring this fancy word like AI, but I think like when everything to build is way easier whenever it's been in human history, right? Like build any software solutions is easier. I think like marketing story, I see it every day. I think it's going to be way harder, and it's going to be the main thing. It's just like, I think like those times when like you're building something, you build and it's worth something because you build it and you put like a certain number of software engineer hours, like they definitely gone. It's just like like there's so many solutions, like people can build them easily. It's just, yeah, I think it's like the marketing, and I don't know, I think like the competition is going to be way high. I just like you're looking what's happening in SaaS, right? Like it's so hard to scale SaaS right now, any SaaS solutions, but I think it's going to be way harder even like in 2 years, 3 years.
Yeah, I agree. And it's definitely an interesting landscape, and you can set up a whole marketing team in a couple hours, and it's 100% robots. And how do I know that? Because I've literally done that. So why can't another solopreneur startup do the same thing and compete with you. Like your ideas have to be really, really good, and your story has to be even better for an investor to come on, but also for customers to come on too.
Yeah.
So let's wrap up with this question then, because I'm curious. I'm not against investors. I'm not against outside funding, and I don't know if you are. I feel like you're not, but it has to be for the right purposes, right? So let's say we have a lot of entrepreneurs on this show who their companies are established, they're 7, 8+ figures in revenue. Maybe they want to grow in a different direction, or maybe they want to take on a software component, whatever it is. Imagine they're going to go to Shark Tank, right? Or some
Mhm.
other group of investors. For you as a CFO, what would you need to see from those companies in order for you to say, okay, you can go seek this outside investment because you'll have a viable return, or you'll have a high likelihood that they will invest and take a reasonable size of your business or your profits? What needs to be in place, or what are sort of the checks and balances that you're going to run through before you would give them the stamp of approval?
Yeah, and first of all, I'm not against investors, but I think like we need to get, especially like VC money, they should be for the right business models. Like I know if you're building, supersonic jet, you definitely need money even before like the first revenue. You can't build
Can't
it.
bootstrap
Or,
that. $450 billion. You can't.
yeah, and then like Uber, for example, like you can scale it. So, like at the time when Uber started or Lyft, like you can scale it with VC money. There's certain window where what you can do, and you can do it without like outside money. But answering your question, it's a very important question, and I think even a lot of CFOs don't really understand. There's a certain optimal capital structure. Like if you look at any company at any stage, what is your proportion of equity and debt should be? And when you reach like a 7 figures, it starts interesting, because like up to a certain point it's mostly equity and you don't really need a debt and you can't really track a debt. But at like when you're 7 figures, where you like your EBITDA, your like your positive cash flow, there's some optionality. In answering these questions, it also depends on your working capital. Why do you need money? Do you need money because you have a really positive working capital cycle? It means as you grow, like for example, e-commerce is a really good example. Like e-commerce, impossible to scale bootstrapping, because as you grow, you need more inventory to sell and you need outside money. You can do this without outside money. But at the same time, for example, what I've seen like a lot in venture-backed e-commerce companies, they make these mistakes the same. Like e-commerce should get the equity first, like I know until like a few minutes of revenue, like to finance their working capital, because they kind of like very small, like the risk is very high. But then they need to finance their working capital with the debt, or like debt solutions can be expensive debt, kind of like I know mezzanine, or kind of like I know convertible notes with some equity components. Because if you're giving up equity all the time to finance your working capital and you need more, you will end up with like close to zero shareholder value as a founder of this company, because you will need. And I think like some first time founders of e-commerce like don't really understand that as you grow you need more capital, not less. It's not like, they thinking, oh, I just need like this like 1 million of inventory and I will be fine. I will turn over it and it's gonna be fine. I will be like, but if you're successful, if your revenue is growing, you need more inventory, not less. You need more outside capital. And yeah, it's kind of like and as I said, like there's no any kind of one answer, but you definitely need to look at your options, especially if you cross like 1 to 3 millions of annual revenue. You need to look at what's options on the table, and you need to look at the debt. But you need to be very careful with the debt, but you need to look at the debt, because debt is definitely cheaper than equity. And there is a certain type of business as e-commerce. I think you can build like a $100 million business e-commerce without debt. It's just like I can imagine this scenario. It's just like probably you sell something, I don't know, with a huge margin. It's like super hyped, and probably you have enough money just to have like finance you grow. But like other than that, I don't see that you can grow. So yeah.
Yeah, I mean that makes sense, and that's why it's so important for people to really consider what they're gaining, but also what they're losing, and what that long-term strategy is. Talking to someone like yourself, a CFO, and really playing it out. I'm thinking even, if you have, let's talk software again. If you have a software product, most startups are leveraging other people's technology to build that product. So servers and storage space and cloud space. If you get big enough and you want to bring that in yourself, that's millions and millions of dollars to build those buildings and house the servers, and then all the capital and infrastructure around that. You need investors for that, but is it worth it in the long run? Like, do you want to grow exponentially, or do you want to get there maybe a little bit slower, but fund it yourself? And that's the stuff where I don't think people are really considering the full picture of it in outside investments. And I'm glad you raised this point today, because there's a ton of other options than going just to VCs or funding. But you have to make sure that your business is in check before that, or else you're not even going to get that funding in the first place. So this was a cool conversation, Stan. I appreciate you coming by.
Yeah, thank you. Thank you, Brandon. Yeah.
So tell me this, where can the listeners learn more about you and just get a bigger picture of what's going on financially in their business?
Yeah, thesource.com, and I have LinkedIn where I post daily about financials. So yeah, and on Twitter also Stan3S. Post every day about financial advices.
I love it. All of that will be in the show notes down below. Go connect with Stan. Go check out the website. Make sure you check that out wherever you're watching or listening. Stan, thanks again for being here, and thank you for watching and listening. We love having you here. I think we're done with the financial episodes for at least a couple of weeks. We'll talk about the rest of your business. We'll round out the rest of your personal life too in the next couple of episodes, help you build a more harmonious business and life. Thanks for being here. We'll see you on the next one.
Another episode of Harmonious at Lunch in the books. I hope this episode made you think and you grabbed some actionable ideas to propel your business. Don't forget to like, comment your takeaways, and subscribe wherever you're listening so we can help more entrepreneurs just like you achieve harmony in their life and business. For cutting-edge tools that bring clarity to your people and processes, check out humanoff.com to download our app today. See you next time.